Good day, students. So today we will talk about the credit system, the second lesson for the financial management perspective, which you actually encountered even as a students, no? So we will be focusing on its fundamental sources and bases. So I actually emphasize that even as a students, you already encounter this one because, for example, when you buy a cell phone or on installment, um, your parents, some of your parents actually use a credit card, no, or your parents take a housing loan. Those are an example of forms of credit. Actually, credit allows us to enjoy something now and pay for it later. So in short, murtag unsa mangutang for the meantime. So for the learning competencies, by the end of this lesson, you should understand how credit works so that in the future you can decide wisely, like whether taking a loan or for a business is a good idea or whether using a credit card for wants instead of needs is risky. So for the learning competencies, we will particularly tackle about the credit and its significance, citing the advantages and disadvantages of credit economy, elaborate the basic characteristics of credit, and explain the different classification of credit. Okay, so what is credit? Credit means refers to the ability to obtain a thing of value in exchange for a promise to pay with money or something equally satisfactory to the seller at some future time. It can also be described as the parting of resources by one party called the creditor to another party called the debtor, where the latter does not give the money back to the first party immediately, thereby generating a debt. So credit means getting something of value today with a promise to pay later, in short. For example, if you buy a laptop worth 40,000 using installment, you already use the laptop now, but you pay for that laptop monthly within a year, for a year. So the store or bank is the creditor, and in short, you are the debtor. So that is how credit works. Okay, now let's tackle about the advantages and disadvantages of credit, no? So credit helps business grow. So for example, a small credit owner may borrow money to buy coffee machine instead of waiting years to save. Credit also helps families such as buying a house through a housing loan. So for students, credit also allows access to gadgets needed for online learning even if full payment is not yet available. So here are the advantages of a credit economy. So it generates additional funding. Credit allows business firms to acquire cash loans by using their existing fixed assets like machines or buildings as security instead of selling a part of their physical properties to obtain money. So in order for them to generate additional funding, they can use all of those as a collateral. So it presents also opportunity, no? Credit gives chance to dynamic and enterprising men to capitalize the opportunity to put up their enterprises through credit. Because when you have the opportunity to generate funds, for example, you will be able to improve the systems, the equipments, or whatever you like, no, for the improvement of your businesses. So it can increase government spending also. So like for example, here in us, since in the Philippines, there is a limited budget or funds. So most of the time, our government is actually asking for a loan or mangutang sila sa World Bank in order for the government to actually utilize it or use it for the program plans and programs that is actually beneficial and helpful for our society. So it actually benefits the economy. Credit accelerates production, employment, income, and consumption. Kasi if people has access to credit, so of course they will be able to buy something, produce something, and they can be able to also help the economy be uplift. No, so it can actually generate production and give and take process. So it postpones financial outlay. It permits low income consumers to enjoy the consumption of goods and services sooner, like house and lot, cars, appliances, and other consumer products. So instead of paying all of those in cash, so we can actually utilize credit, no, to pay it um, at a lower amount per month, for example, if it is paid in installment. So para instead na bayaran mo siya ng cash, for example, at a very high amount of um, money, so we can actually, or you can actually utilize those money for your other projects. So it actually postpone financial outlay. So, however, there are disadvantages of ano, credit economy, no? Credit may lead to inflation also. So, heavy borrowings by the government may likely lead into inflation. If you say inflation, it is a sudden increase of the prices of the and goods and resources. So that is why it's not good, no, if we actually do credit without actually paying it on time, because it can lead to this one. It can lead to wastage of resources. Borrowing by the government may result to extravagance and inefficiency. If the government actually borrows a certain money from the World Bank, for example, or from any financial institution, so it would be okay if all of those borrowed money is utilized accordance with the appropriate in accordance with the appropriate plans and programs that was being presented. But if ever those borrowed money is not utilized properly, like you really don't have any plans about it pa, so like kamot may kung saan mosulod sa huna-huna, so that would be very dangerous. So that is why when you actually it's very advisable that if you actually borrow a certain money, kailangan meron talagang project proposal, no, so that we can really know kung para saan gagamitin ang pera. Unlike cash, credit has a pervasive effect, your adverse effect. No? Business errors in the use of credit funds have unfavorable chain effects on the whole economy. Failure of some firms to settle their debts with other companies affect the latter. Okay, of course, kay nangutang man ka. So it is not just you who are affected, but also the creditor itself. No? In turn, the banks will be having cash problems like what the world experience in right now. Okay? So it can burden the next generation. So excessive loans from other countries by the government may likely be burden to future generations unless such loans are wisely invested in the economy for the benefit of the masses. So as what I told you earlier, a credit is good whenever there is a clear plans and programs that is laid down. But then, if there is no clear programs that was laid down, it can really burden the next generation. Like for example, what happened here in our um, political aspect, no? Like for example, there will be a coming election, and then the incumbent officials actually borrowed large amount of money. It's supposed to be, it must be utilized for a certain project, but then that project actually failed. So with that heavy borrowings that they did, when their term ended, of course, parang namamana ng next set of officials yung utang na na-incur ng incumbent or yung previous na mga officials. So this could have a pervasive effect, no, kasi um if there are good plans and programs that they wanted to implement, but one of the barrier to those is that wala nang budget, it's because binabayad na lang sa utang. So that's not a good na scenario. So another is it can reduce spending. So in some cases, credit reduces future consumption of debtors. So as debt constricts confidence in consumption, sales and production slow down, which can lead to reduction of employment. So of course, remember that we have a give and take relationship here in the economy. So the businesses are also reliant with the residents, the economy, the way they buy the product, for example. So it has a give and take relationship. So whenever you have large debt, for example, you will be restricted to um, do economic activities, no, like buy some goods or purchase some mga resources in the economy. So, yan, instead of kanang you can actually generate economic activities, so it can be reduced. So that is not a helpful in the economy, no. So credit is good, but credit can be dangerous when abused. For example, if someone keeps swiping their credit card for unnecessary shopping, they may end up with huge debt and high interest. So at the government level, too much borrowing can cause inflation, no? Which leads to higher prices of basic goods like yung staple foods natin, no? Like the rice or even the fuel. So fuel is very important for us right now because almost everyone already have a motorcycle, for example, a car, for example. So, yan, it can actually leads to that. Okay? So, that is why it's very important that we will have financial literacy. No, we learn financial literacy so that we can know um, when to borrow, for example, when to use the credit cards, for example, how to use it wisely, for example. So the more knowledge that you have, the more you'll be very much productive, no, by using the credit credit economy. So next slide is this the basic characteristics of credit. So let us now discuss the basic characteristics of credit and connect them to the real situation, no? So, wait lang. So, now let's have the bipartite in character. Credit involves a meeting of minds between at least two persons or parties who agree on terms of the transaction. Yes, of course, no? When you say bipartite, there are two or more persons who are actually involved in the transaction. So the creditor who lends out his money or property and the debtor who receives and promises to pay the said obligation at some future time. A credit transaction by description is actually reciprocal, no? So parang give and take. So in strict substance which springs from the trust and confidence of the creditor and the duty to fulfill the obligation of the debtor. So, again, credit always involves two parties, no? In which meron tayong creditor, yung nagpapautang, and meron tayong debtor, yung nangutang. So, example, when a bank lends money for a motorcycle loan, because you want to purchase motorcycle but you don't have any cash to pay it whole, no? The bank is considered to be as the creditor and the borrower is considered to be the debtor. So both must agree on the amount, interest. Of course, pag once na mangutang tayo, meron yang interest, of course. And the payment schedule. So, how many months to pay or how many years to pay. So, all of that must be available, no, when you do credit transaction. So, next, number two, it is fiduciary. Credit is based on trust. So, in the entire web of business and economics, credit is playing an important role in giving more thrust to the economy, and it would not have been like this if there is no special trust and confidence by any party into a credit transaction. So, Credit again, yeah, credit is based on trust. Like for example, when a bank approves a personal loan, no? So it trusts that the borrower has a stable income and will pay on time. So, pero once trust is broken, future loans may no longer be approved. So that's why it's very important that you will be a member in good standing when it comes to paying your obligations. Kasi it would actually affect your future transactions if ever nga dili nimo siya mabayaran. Number three, it involves futurity. In credit, there is always a future time involved since by substance, a credit transaction is just a need today satisfied by one party with confidence of getting paid in the future. So, again, credit always involves future payment. For example, when you use a credit card today, you will only pay for that purchase next month, no? So that delay in payment is what makes it a credit transaction, of course. So, like for example, you really don't have any budget right now, but you really want to purchase that one badly, or if it is really in need, so you can actually do credit transaction para makuha mo yung resources. But of course, in the future, you have to pay for it. Okay, next, financial in nature. Credit involves something with economic substance. Credits are expressed in terms of volume of goods and or its monetary equivalents, and in this context, credit is now fully financial in nature. So, credit always has monetary value. Always remember that, no? Whether it is a 5,000 phone installment or a ingon tag 5 million business loan, credit is measured in money and it actually affects financial planning. So we are not anymore in the barter economy or barter system wherein you have to pay certain goods by certain goods. So lahat ng mga bagay right now must be quantified. So credit is financial in nature. Number 5, there is always an element of risk, no? Credit is exposed to uncertainties considering that it involves futurity. The danger of not being paid is always present and possible. So, credit involves risk because payment is not guaranteed. No, meron pa ganing instances that uh, di siya mabayaran sa debtor, no? Or maugtas na lang og kanang singil ang ato ang creditor sa ilaha. For example, if a borrower loses their job, for example, kasi unstable yung job niya, they may fail to pay their loan. No, this is why banks check credit history and income before lending. So when you are going to borrow from a financial institution like the bank or kanang mga yun, mga lending, so of course nagakandak yan sila ng CI to check your capacity to pay, of course. Okay, now let's move on to number 3, the use of credit cards, classifications, and classifications of credit. Okay? So, so the plastic credit card with a magnetic strip or chip that many people carry in their wallets or purses is the end result of a complex banking process. Holders of a valid card have the authorization to purchase goods and services up to predetermined amount called a credit limit. Okay? So, a credit card actually allows you to buy now and pay later, as what I told you earlier, no? Example, again, you use your credit card to buy groceries worth 3,000. The bank pays the store and later you pay the bank. So if you do not pay in full, interest will be added. So that is how the process, no, takes place. So yan. If the entire balance is not paid in full, the issuer can legally charge interest fees and surcharges on the unpaid portion. So that is why, like me, for example, when I utilize my credit card, I am very particular with the due date of it. Kasi pag once nga hindi ko yan mabayaran, so malaki yung interest na magpapatong yan. Pero if I will actually pay that on time, there are no interest that will be incurred for that one. Okay? So, yung credit card, there are two types of it, the secured credit card and the unsecured credit card. What is this secured credit card? It requires the applicant to deposit the amount of cash equivalent to the credit limit desired. If the customer fails to make sufficient payments, the deposited money will be used to satisfy the debt. So, secured credit card, from the word itself secured, meron siyang credit limit, no? May tag, um, you are allowed to borrow money from the bank using your credit card, um, with a credit limit of 500,000 a month. So meaning, di ka pwede mag-borrow ng more than 500,000 in a month. So, a secured credit card requires a deposit also. So, example, you deposit 10,000 and your credit limit is also 10,000, yan, pwede po yan siya. So, yung unsecured credit card naman, it is issued to those who have a good credit history and have demonstrated an ability to repay the accrued debt on time. So, essentially, a pre-approved purchase or loan with interest rates higher than a similar personal bank loan. So, an unsecured credit card is for people with good credit history and does not require a kanang deposit. Okay, so, yan. So, para sa mga mayayaman, yung sa unsecured credit card because they don't have any credit limit in which na kailangan in which na they can actually do transaction in an open um, they can do open transaction um, in a month. Kaya unlimited yung yung transaction nila. For as long as they can actually pay it on time, so they will be given that perks. Okay, so let's move on to the classification of credit card, no, according to category user. So we have here consumer credit, no, refers to a short and intermediate term loans uses to fund the acquisition of commodities or services for personal consumption. So like for example, buying a phone or appliance on installment, yan. Yung bank credit naman refers to credit extended by commercial banks for purposes of assisting businessmen. So, another example, okay, wait lang. Wait lang. Okay, so another example niyan is yung sari-sari store buying goods from suppliers on credit. So, they can actually do that one. So next is yung agricultural credit. No, any of credit arrangement used to finance agricultural transaction adapted to the specific financial needs of farmers which are determined by planting, harvesting, and marketing cycles. When a farmer borrowing money for seeds and fertilizers, yan. And we also have industrial credit, no? Intended for financing usually high capital outlay projects like mining, logging, fishing, manufacturing, and other similar endeavor which involves huge amount of money. So like for example, when a factory loan buy heavy machinery, so they can actually utilize a kanang industrial credit. So we also have commercial credit. No, commercial credit has to do with the ability of business to obtain goods and services from a supplier, extended with the understanding that the business promises to pay the supplier according to the terms and conditions that the buyer agreed to at the time of acquisition. Okay, same with my example kanina, yung mga when a sari-sari store buys goods, no, from a supplier on credit. So, inuutang niya doon, pwede po diyan. Okay, then we also have real estate credit, no, refers to credit extended for purposes of construction, expansion, and acquisition or improvement of real estate properties such as land and building. So, example for this one is if meron tayong housing or land loans. So, export credit naman refers to a credit that is connected to an export transaction. So, this is an extension of credit to a foreign buyer substantiated by a shipment of goods or delivery of services to a foreign business entity. Okay, so a company, example, when a company shipping goods abroad and allowing delayed payment. So, yan, pwede yan siya as an export credit. Now, let's proceed to classification of credit, no, according to its maturity. So short-term credit, class of credit, the pre-arrangement of which that payment will be made within 1 year or less. So usually igoan ni kana ganing mag ano ta, personal loan ta, in which na you will pay it for 6 months only. Those are classified under the short-term credit. So meron din tayong tinatawag na medium-term credit, a credit term whose maturity is more than a year but less than 5 years, no? Usually, if you have a car or auto loan, so pwede po ito ma-fall into this medium-term credit. Yung long-term credit naman, a type of credit which carries the maturity of 5 years or more. Typical examples of long-term credit are bonds that usually carry a period from 10 to 25 years. So, common is yung mga merong mga 20-year na housing loans or yung mga buildings, like for example, merong hospital buildings nga ginatukod dira, they will actually fall on the long-term credit, no? Kasi it actually involves large sum of money for it to be paid in full. Okay, so those are the classification. So, pag mag-loan tayo, meron din tayong credit according to release of the loan, no? So, yung lump sum release naman, it actually refers to one-time giving of the loan proceeds to the debtor or borrower. Like for example, if you do personal loan, it will be given to you full at once, no? Like for example, if you have a loan of 100,000, so yung net na marireceive mo, deducted yung mga service fee and other na mga fees, like for example 95,000, so it will be given to you in full release. So yung installment release naman, there are periodic giving out of loan dependent on the pre-agreed basis. So it's actually based on project progress. Based on project progress can be one of them. No? So installment release is yung like for example, no, there's a construction loan released based on project progress. Pag nag-loan ka to a certain like for example in pag-ibig, so they will not actually give you in full the money that you actually borrowed. So it will be according to the ano kanang um, progress niya, yung milestone niya. So like for example, you are in the planning phase, next is you are in the next phase. So for every phase na makomplete siya, yun yung release ng payment niya. So that's an example of installment release. So meron din tayong according to the manner of repayment. Okay? So yung pagbayad natin. So same gihapon, when we do lump sum payment, you actually pay a loan in full after an agreed time, no? Like for example, after 6 months, bayaran mo siya in full. Yan. Meron din tayong tinatawag na installment payment. So, nagborrow ka sa kanya, pero you will actually pay them in staggered mode, no? In an agreed span of time. Like, okay, you will pay that person for 6 months, no? Including the interest that you incur. So, pwede din yan. Okay, so according to security naman, meron tayong tinatawag na secured credit, a type of credit arrangement which is dependent on some specific item that would serve as a security. Example, property, real or personal, tangible or intangible, which will be set aside to guarantee payment of the obligation. So, like for example, secured credit, housing loan, where the house is the collateral, no? So yan. Then meron po tayong unsecured credit or yung ginatawag na character loan, type of loan where no property is being used as security for payment or as a collateral. So merchandise credit is one example of this kind of arrangement where customers are granted the credit, pwede sa mga utang, without any backup or collateral property. So agricultural credit extended to farmers is another example of this category. So it is actually called unsecured because you do not have any guarantee, no? Nga kanang like pwede mo sila mahabol when it comes to the payment of that one. So it is actually based on trust, no? Like for example, credit cards or salary loans with no collateral, like nag-approve lang jud sila niyan. Okay, so yan yung mga according to security. Okay, according to how the credit is granted, let's proceed to this one. Okay, we have a direct credit, a loan by a bank to its client or customer without the employee of a third party like dealers and other middle handlers. No, direct credit provides the lender more opportunities to screen credit applicants directly than indirect lending. So, direct credit is example for this is yung mag-bank loan tayo directly to the borrowers. Okay, so next is yung discount loan, a loan arrangement where portion of the interest and any other related finance charges are calculated at the time the loan is granted. So at the same time, the sum of the interest and other charges are deducted from the face amount of the discounted loan. So there are interest that is deducted in advance. So this is actually common in short-term loans. Okay? So, I think that's it, no? So, as a closing remarks lang for this topic, credit is actually helpful, no? When used for needs and if it is for investments, actually. Like, for example, educational purposes or business purposes. But, of course, we have to be very careful because it can become harmful when used for unnecessary wants, no, like when you do impulsive buying, for example, like that. So simple lang, the key is simple: borrow wisely, pay on time, and live within your means, no, para ma-manage natin yung mga credit transaction natin. Okay, that's it, and have a good day.